Today is April 9. It is Sunday, and happy Easter, everyone. So, we're going to look at the three indexes and try to forecast the market direction for this week using unusual options. If you haven't seen our video last week when we did this, we forecasted a bearish week. And so that was correct. And so this was a red candle that week. The momentum stopped. And so where do we go from here? Is it going to rally this coming week, or will we drop earnings? The banks will be reporting, some of them will be reporting earnings. So that's something to keep in mind for this upcoming week of the 9th. And so let's figure out without further ado. And let's take a look at the options that ended on the last day of last week. So what we want to do also is let's filter out only looking at the upcoming week. So that's these days up to April 14th. And let's see here. We have here at the 393 puts. So we're currently at 409. So that price is very, very below that. We have something up here, 418 above that. You'll see here that these calls are being, they're colored green. However, that does not necessarily mean that they bought it, especially if you look at the market pricing, they're very narrow. So the pricing here, just because if we look at the narrow pricing here, the colors sometimes don't necessarily have a less of a accuracy in predicting whether or not it's a buy or a sell. And if you haven't watched our video on the colors and what they mean on the options tape, do look at that video. We did make a video to explain what colors mean. So don't get too bullish just because these two are colored green, okay? Because it could have also been a sell. They could have sold this call here, okay? Same thing with these puts too, right? So when we look at these unusual options, especially for a very liquid ticker like the SPY, these market bid-ask spreads are very tight, and so colors don't necessarily mean as much. So but we want to look at the strike prices. They seem they're much more interesting to see where people are targeting for the week. You'll see 393, 395, 402, 386, 407, 386, right? These are all below 409, and so that's something that's telling us, even if they were bearish, let's say they did sell these puts because they were bullish, then let's say they sold it, they were slightly bullish, but then they're not very bullish because they're selling them at such low strike prices, right? Okay, so kind of looking at this, it's doesn't look very bullish, and we can also see here on the statistics, the puts for that day, the last day, there was a lot more puts overall as well. So it's not giving us very, very strong bullish signals for this SPY chart, and so it is a hollow candle. So the bulls did try to fight back on this this week. So there's quite a kind of indecision here. Okay, so that's what we're getting at. So I think there's more of a slightly bearish feeling with this options tape here. Okay, so let's move on to the next chart. the next one, the Nasdaq, the QQQs, you'll also see here we had a red candle on that previous week. So we also predicted that. And you can see that video we did last week on this, that we predicted this red candle for the week. And so let's take a look now at the unusual options. Okay, so filtering again for just this week's. And we see something here at the 141. You'll see here these 9,900 contracts, and then 3,300. This looks like a ratio spread to us. So if we analyze this, this is on April 12, the 330s and the 320s. It's a 1 to 3, right? So the 330s were 3 times the amount of the 320s. So that's on April 12. Let's take a look at that. There were 3, so 3. So, but keep in mind that this was the volume here is actually less than the open. Okay, so it could have been a closing order. So we won't know until tomorrow. Okay, so but if we were to assume that they were opening orders, we would have to have 3 of them, and then one of these 320s. For the 320s, because the volume is larger, it is an opening order. So that's something to keep in mind. It could have been so it could have also been, you know, maybe they closed this one and opened this one. So could have like rolled the position down in strikes. So that's something to keep in mind. But let's assume that this was a back ratio, and we analyze this together to see what it meant. So it looks like it is a bullish bet, but it does also have its bearish. It does make money if it stays where it is and doesn't cross 321 by expiration. It is still profitable. So this is a mix of bearish sentiment because it'll profit, and in the rare probability that it rallies past 334, you'll see here the break even here by expiration date. It will be profitable, and this is a rare chance you'll see here. That is just quite just a very low percentage that it will be 334. You'll also see here on the chart, where is 334? If we move back, 334 is, let's zoom out. We can see here that 334, let's see, is actually a resistance here. You'll see here 334 exactly. You see that 334 right here on August 15th, that week back last year was the high right here. So this that's probably why they had made a back ratio. If this were to really rally next week for some maybe very good earnings or some surprise, they would be profitable. Otherwise, as long as it stays below, this stays below, they will also be profitable. The only way they would lose is if it trades around this range and stays around this this range here, from about 321 to 334, this price range, because you'll see the profit and loss here is actually lower than 0 as the time decays. So But they are hoping for either a very strong rally to break that 334 or something just as long as it stays below that level. They will be profitable and they can keep their credit of 181 per contract. And because they did 3,000, each of these calls that they sold requires 1,000 buying power. So since they did 3,300 of them, you could calculate that right away and see that it required $3.3 million to put on. Okay. So that's quite a trade that a large institution would do. Okay, and moving on to the last index, the Russell. Let's take a quick look and see what we have here. Let's turn on all the weeks, all the days for this coming week. And let's see. We have we are at 173, 178 here. So that's, and then we have that looks like selling a call there. A 174 bearish here. And here we have a 324 here. This one looks like another one of these back ratios. You'll see here that this one is on a ratio of 1 to 2 because 2,500 times 2 is 5,000. So what is this one? Because this one is bearish. This is bearish. This is here. Let's see. Let's take a look at this one. Selling the 173 puts and buying 172 twice. Okay, that's on April 10th. That actually expires tomorrow. It's 173. And two of these 172s, and then let's analyze that. Let's turn that off. These are other trades. So this is the ratio. We have to put the expiration down. So this is bearish actually. So this was bearish. However, if it goes up, they're not at much of a loss. This is very good if the market crashes tomorrow, I guess, because it expires tomorrow. So as long as it drops a lot, that's what they're thinking, is that hopefully it drops a lot and breaks 170, below 170. You'll see here's the break even. And so that's bearish. So it looks like for the Russell here, it's bearish for this coming week. You also see here a bearish week for the Russell. So yeah, watch our video that we made for last week's unusual options on these indexes. Also, this bearish was played out well, and so that's also what we're thinking is bearish week coming up. And again, but the earnings are coming up, so there could be a surprise, and yeah, so keep that in mind. Okay, so we'll put that video that we did last week on the index, so you can also look at that and learn how to analyze the market using unusual options. And we'll put that in the link below, and subscribe if you haven't. Give us a like if this was helpful. It really helps our channel grow, and so we can keep making these videos and update everyone on the unusual options we see. Hit the bell icon and you'll be notified whenever we see them, because they come up very quickly, and you may have, if you want to use it, sometimes you have to act on it as soon as possible. All right. Okay, well, take care, everybody, and happy Easter.